Speaking of, look at Charles Schwab. The stock turning higher despite missing revenue expectations, now on pace for its best day since July and up more than 5%. Joining us in an exclusive interview is Charles Schwab CEO Walt Bettinger. Walt, welcome back. Good to see you.
Hi, Sarah. It's good to see you. Thanks for inviting me back on the show.
Of course. So talk us through the results a little bit. You know, if people were worried about lower deposits, it sounds like on the call you offered some soothing words of things improving as far as the overall environment. What are you telling investors?
Well, the economic environment is challenging. We all recognize that, with equity markets depressed and interest rates at highs for many, many years. So we don't want to downplay that. But we can see some light at the end of the tunnel at Schwab. We saw client cash realigning out of our bank sweep offering, which is the largest, most important part of our cash aligning, actually turned positive in the month of September. So we're optimistic about where things are headed in the long run, even though the short run is still a fairly difficult environment.
Right. So that was the concern going in about the cash sorting and the fact that we've seen this step up in interest rates even farther. We're causing some of your clients to move from the bank into money market funds, the sorting issues. So are you saying it was worse during the quarter and it's gotten better lately?
Well, September was an excellent month for cash realigning diminishing. I think, though, what's important around this entire discussion is that we want clients to do what is in their best interest. And if that means moving cash out of our bank sweep product, which operates principally like a checking account, into higher yielding options, that's something that we encourage. We want them to do that. Again, we're in a long-term perspective here. We recognize in the short run that it might affect our economics, but that's okay. The trust that we build with clients by encouraging them to do the right thing pays off for us many times over in the future.
Yeah, I mean, there were also questions about capital levels going in and whether the higher interest rates would cause these capital ratios to decline and then lead to some securities portfolio losses. What are you updating investors on that front?
Well, our capital levels continue to grow, and they build throughout the third quarter. We remain substantially above all regulatory minimums for capital. I think what you have to bear in mind for context around this interest rate move is that when interest rates go from, say, 1.5% to 4.5%, that's a 300% jump. That has a big impact on the value of bonds. When they move from, say, 4.5% to 4.75, that's about a 5% move. So when you put things in context, the type of moves that we've seen of late don't have anywhere near the impact on the value of bonds as what we experienced over the prior 18 months.
Well, we're looking at daily average trades today. A lot of discussion about sort of suppressed interest in equities, at least, as people find it easier to just park money in money market accounts. Can you talk about how that's affecting the trader psyche that you know?
Sure. Well, we saw in the third quarter investor sentiment move from positive, or what we call a bullish sentiment, into a bearish sentiment. And so when investors begin to head in that direction, you see a slowdown in trading. That's sort of natural and something that we've seen over the history of our firm. So that is the environment right now. It's tough for investors. Their bond holdings have declined in value, and equity holdings are, for the most part, down for almost all investors. But they remain loyal. They remain consistent, trusting of us. I think in September, they brought about $27 billion in core net new assets into the firm, which is a pretty remarkable number given where the investing environment is overall. So it bodes well for the long term.